90% of traders don't realize that the reason they're not finding profitability is due to consistency. I'm sure some of you have a trading strategy that actually makes profit, but for most, there's probably going to be something that's just not lining up right. It's causing you to lose money, even though you may have a pretty solid strategy. I faced the same issue when I first started trading all the way up until I became profitable. So what did it for me? A trading plan that targets consistency. It's really about finding consistency in the parts of your strategy that works. Once you find the parts that are working, create and develop a trading plan that will maintain consistency. That's where you can take your strategy to the next level and start seeing consistent profits. There's just one problem, however. Most people don't know how to make a consistent trading plan. Don't even know what a consistent trading plan entails. Most people don't even have a trading plan. Most importantly, what makes a good consistent trading plan? So let's dive in. So where do we start? First and foremost, obviously the key here is consistency. So tell me if this sounds like you. You win trades here and there. You seem to always make some sort of mistake that leads to you losing. This is actually a good place to start. First part about being a consistent trader is finding the consistencies that already exist within your strategy. Analyze your winning trades and ask yourself, what are the similarities with your consistent trades? If you tend to notice a similar or consistent patterns within your winning trades, then you're onto the right path. For example, you can notice that most of your winning trades happen to be within the London trading session. Maybe you notice your winning trades are mostly in the first half of the week. Using your strategy without a trading plan is like free falling through the Forex market. If you don't set certain parameters for you to trade within, you're just going to be free falling through the market and you're going to have no control. In a market where it's already hard enough to have control over what happens, you must find the things that you can have control over. And now, see, analyzing your winning trades is only half the equation. It's just as important to analyze your losses as well. And I think this is something where a lot of people may skip over, may tend to skip out on. And I think this is honestly where I find the most consistent profitability. Once you learn to eliminate losses, that's where your profits will outweigh your losses. So you want to find the consistency within your winning trades and the consistency within your losing trades. So for example, you may analyze all your trades from the past month, past couple weeks, however long you want to analyze it for, maybe even a year of trades, depends if you log your trades or not. Maybe you notice that a lot of your losses come from the times that you've traded without all your confirmations being fully met for your strategy. Maybe you notice that all your losing trades happen in those times when you're like, it doesn't fully line up with my strategy, but it's close enough, I'm going to take it. If you go back and you look at those trades that aren't fully lined up, you notice that's where your losses are. It is so simple to just eliminate that. But a lot of people don't analyze this stuff, and that's where it can get all confusing. Another example, maybe you notice a lot of your losses happen on Fridays. These are the analytics that you must pay attention to. It's one of the only real things that you'll have control over in the Forex market. So how do we piece together a good trading plan? That's the question. How do we make it consistent? So after doing an analysis of your losses, analysis of your wins, first thing you need to do is set some parameters. So after analyzing all your wins, you're going to find certain consistencies within your winning trades. Now, when you're writing out your trading plan, you have to have do's and don'ts. So for example, your do's will be, okay, maybe I analyzed all my winning trades from the past month. Maybe I noticed that all or most of my winning trades tend to happen within the London trading session. So one of my do's, one of my parameters that I set, so I'll have control in the Forex market, one of those parameters will be do trade within the London session. That's going to be one of them. Maybe you notice that you only win your trades in the first half of the week. So you're going to write down do trade in the first half of the week. So now you have two parameters for you to follow that will bring your trading to the next level and give you more wins. Now, more wins is good, but how do we get less losses as well? That's where the next part comes in. So you're going to have don'ts. So like I said, maybe you notice a lot of your losses happen to come by on Fridays. Well, write down in your trading plan, don't trade on Fridays. Maybe your losses happen when you notice you tend to be more emotional. Maybe there's a day where you're a little bit more emotional. You start getting you can't think right. You start taking trades that don't actually line up with your trading plan. Well, first of all, don't trade when you're super emotional because we're humans, right? Sometimes we let our emotions get the best of us. We can't actually pay attention logically to what's going on. So maybe don't trade when you're emotional. Don't trade when your strategy and all the confirmations that you use for your strategy aren't all lined up. Don't trade unless all your conditions are met for you to take a specific strategy trade. So this is a nice example of a simple trading plan that you can use. But here's the thing, even after making this trading plan, the most important part is having control over yourself. See, sometimes we notice as traders that we can tend to act on our emotions. This can cause us to get out of line when trading. Sometimes you might not even follow your trading plan. Spend this whole time making this trading plan, not even to follow it. So the next thing to work on is becoming consistent with yourself. How do we make sure that we can take the same trades, that we can follow the same trading plan consistently? If you can't be consistent in your trading, you're having trouble being consistent with your trading plan, your strategy. What can make it even worse is not having a consistent, reliable broker. If you're having a broker that's working some days and not working other days, or maybe giving you good market execution for your scalps one day and then slower market executions another day, it's another thing and another inconsistency that you can find within Forex market, and that's not something that you want to add on to what you already have. So good, consistent, reliable broker that I've been with for a while now is Hanko Trade. If you're interested in signing up with Hanko Trade, I will have a link in the description. Go ahead and sign up with them. They have their own very special platform called Hanko Trader or Act Trader. That's just another thing that will bring consistency to your game. They have their own in-house platform, so they're going to have many more advantages by owning their own in-house platform. A lot of these advantages you're going to see while you're using the platform. Things like faster market execution, higher leverage can give you better, more consistent trades for your scalps, things of these nature. So if you're interested in signing up, use my link in the description below. And I can almost guarantee that most of you are not taking consistent trades. Most people are taking trades on multiple different strategies, multiple different setups that they see. And it turns out that most traders have trouble taking consistent trades because they think that the more trades they're taking is the more opportunity for them to make money, when that's just not true. So the easiest way to get over this is by understanding that the money won't come with quantity of trades, it'll come with quality of trades and time. So it's not about how many trades you're taking in a month, it's just about how consistent you are on a month-to-month basis. And a lot of people have trouble wrapping this concept around their head, which is understandable. So if you're like this, there's a simple task that you can practice. It's very simple. Open up a demo account. You're going to call this your consistency account. You can use whatever amount of money you want. Call it your consistency account. The main goal of this account isn't about how much you make, but it's about how consistent you can be on a day-to-day, a week-to-week, a month-to-month basis. Don't worry about how much profit you're making or not making. This is simply to train your brain to be consistent with your trading plan and with your strategy. And at the end of the month, I want you to compare your consistency account with your other main accounts or whatever you're trading with. I guarantee you that it's going to perform way better than your main account, and at worst be at least similar to your main account. And hopefully, month to month, you'll start to give yourself a new perspective on consistently trading. Not only is it going to show you that consistency is better, you're going to be consciously practicing consistency, and that will transfer over slowly to your main trading accounts as well. Once you learn that, you're going to be making $1 million a day. No, I'm just kidding. The reality is it's not all sunshine and rainbows from here. You're going to have to continue to practice this forever. Consistency is something that should be almost like a muscle you're constantly working on, you're constantly training. And the more you keep up with it, the more consistency you're going to see within your main account. The more you work on that, higher win rate and the more profit that you'll start to see rolling in.